Good morning, everybody. Thanks very much for joining us. Really interesting discussion topic that we've got this morning. We're looking at hot assets in the CEE, and particularly looking at, I suppose, the market that we've seen over the last kind of 12 months, and also very much looking forward to 2022. We've got a fantastic panel here, and I'll introduce those to you in a minute. But first of all, we're going to have a welcome from Monika Rajska-Walinska, who's Chief Executive Officer for CEE at Colliers, and then a presentation from Kevin Turpin, who's Regional Director of Research for CEE at Colliers, just to give us a kind of look at the market. But first of all, thanks very much, and over to you, Monika.
Oh, thanks, Richard. So, as you already know, my name is Monika Rajska-Walinska. I'm so delighted to co-host the Hotspot Investment Briefing for CEE region. I wish we could meet in person in our beautiful office. As you see in my background, I just put it, just that we used to do it and we planned it, but it was initially planned. But I'm sure you understand our care for your safety and healthy. So I'm happy to see such a distinguished group of experts. So Justyna, Anna, Petera, Angelus, and then Kevin, who represent different sides of real estate market and agreed to share with us their insight and prospect for the future. From my point of view, this year was challenging for some of the market or specific sectors. Some sectors are actually winners for this year, but I'm still start looking forward and ahead to 2022 with some confidence, seeing that the CEE economy is bouncing back from the experience of the coronavirus uncertainty. We can also see that investors continue to show their interest in the CEE markets, as over 75% of capital is represented by international players. Kevin will share with you more market details in this context. So there are obviously a few relatively new trends impacting property market and growing focus. With being said, I'm sure that you will touch upon ESG. We discussed with today and the social impact, and we cannot ignore the COP26 requirements regarding the zero transition plan for 2050. So I wonder what is meant for investment in the real estate sector in our region. So obviously there are also important changes for the retail sector, which since the pandemic is more focused on the local and food anchored retail shapes. So there are so many fantastic topics to cover, and we have only 1 hour slot, so I will not block our experts' time. I wish you all a great discussion and encourage our audience to contact us through the chat tool during this discussion or address us directly after the event. And so thank you for all. Kevin, welcome to take it from here. Yeah.
Well, thank you again, everyone, for joining this morning. Just got a very small handful of slides just to run through, just to set the scene of what's been happening really over the past sort of 12, 18 months, and some sort of headlines of where we think some things are going to be going in the near future. So obviously this is an investment briefing, so we'll talk about what's been happening in the investment markets. So for the year to date, so Q1 to Q3 period, CEE volumes are down 20% on the same period of 2019. Volumes last year were down 25% on 2019 levels. So when you think that largely shopping centres and hospitality sectors are largely not traded, then you could actually argue that's actually not a bad result. And also coupled with the fact that quite a lot of investors have had some sort of travel disruption and haven't been able to get out to the markets to look and close on deals, then it's not terrible. For the full year, we are expecting similar levels to last year, so that's going to be somewhere between 10 to 11 billion traded over the 6 markets that we're talking about here, which is obviously Poland, Czech Republic, Hungary, Romania, Slovakia, and Bulgaria. Now, as you can see, Poland is the biggest market in the region. It has, arguably, the most product, of course, available, and the most product that's being currently marketed. So unsurprisingly, over the last sort of almost 5 years, it is responsible for just over 50% of all transaction volumes, followed by the Czech Republic and Hungary. So I think the Central European region is important within our sub-region, but in the context of Europe, just to sort of give you a rough idea of how this stacks up, the CEE volumes for this period are about 5 to 6 times smaller than a Germany or a UK, and Poland, for example, in this context, is a similar size market volume-wise to somewhere like Norway or Switzerland, for example. If we move on to where the capital is coming from, again, it's quite a mixture in terms of both domestic and international capital. So listed there in order. So Poland, is by far, as is commonly known, heavily reliant on international capital, almost 100% even. And whereas Hungary, the Czech Republic have a much stronger base of domestic capital that's been increasingly active over the last few years, and actually, domestic capital, as Monica mentioned, is responsible for about a quarter of all volumes in the region, and I said it's important to say that that capital is that domestic capital is not only investing in their own markets, but they're also investing cross-border within Central Europe as well. Again, some international investors we've seen sort of tail off. So let's say Middle Eastern and African, and South African capital has sort of dropped off over the last couple of years. Asia Pacific, money from Asia Pacific has dropped off a little bit, as has North American capital. We do expect to see those come back, particularly when travel restrictions are lifted, and of course subject to suitable product and product being available. And again, some of that capital is looking for scale. They want to deploy large volumes of capital, and and occasionally we've seen that there just isn't the ticket sizes available in some markets to be able to do that. And in some cases also investors might not have infrastructure or teams on the ground to manage that after the fact. Pricing, where's pricing gone? So we still, it's in Central Europe, we still have a competitive spread to most Western European markets, and other indicators such as 10-year bonds, which still 10-year European bonds, which still are sort of trading around that sort of zero, even sometimes even in negative territory. But INL yields, industrial yields, unsurprisingly, have outperformed beyond probably anybody's expectations. On average, they've come in compressed by 100 basis points across the region, and Poland, we've seen them compress in excess of 180 basis points since Q1 last year. So quite phenomenal results in that respect, and we even see those coming in even further. Prime offices, early COVID days, we pushed those out largely by about 25 basis points. They've sort of stabilized. They've in some cases have come in as investors see core offices and as a sort of a fairly safe bet still. And and again, it's different for different sort of quality levels or locational elements, but largely speaking, offices have remained stable for now. Prime retail, and we're talking largely shopping centres here. We've seen a very limited amount of transactional activity, but most of the activity has been in sort of retail parks and smaller formats, and we'll hear a bit later from our colleague here from Kaufland. And again, but with the lack of product in other sectors starting to frustrate capital, it's very likely that we could see a return of retail coming back in next year, and again, largely dependent on how the pandemic plays out over the next few months. Now, this is a very busy slide. There's lots of topics. Obviously, the world is complicated and there's a lot going on. And obviously, we're talking about multiple sectors that all have, various factors that affect them. Quite clearly, as I'm sure all of you have realized, that you can't have a conversation today about property without talking about ESG. So obviously so we put that across all sectors, and we'll talk about that in a little bit longer. I mean, obviously, the built environment, we all know it's about 40%. It's responsible for about 40% of all emissions, pollutions, however you want to talk about it. We've done a brief survey or sort of some analysis at Colliers recently, and we sort of estimate that the capex required to bring the built environment to meet sort of the sort of energy efficient standards could cost anywhere upwards of 7 trillion euros. Now, 2/3 of that is the residential sector, whether that's PRS, whether that's sort of privately, individually owned, or state social housing. That's still $2.5 or roughly $2.5 trillion required to bring corporate real estate up to standard. Otherwise, there are rising costs. So on top of these additional costs that we might need to put into our properties, labor costs, material costs are still on the rise. Obviously against recent backdrop, we've got lots of political noise locally, but also globally. Whether it's trade, whether it's countries wanting to take other countries back. There's a lot of noise going on, which will cause, wherever you're from, will cause you various different bits of concern. But just very quickly, just highlighting a few things from the office sector. I call it flex and flexibility. Looking ahead, we've seen obviously quite a lot of disruption in respect of the pandemic and people working from home. Companies adopting hybrid, making more use of flex, but also looking at options for more flexibility in terms of leases, being able to expand, contract. But also, labor availability, low unemployment, and rising costs of labor. In the industrial sector, again, very low vacancy. It's almost completely sold out across the Central Europe. They can't build it fast enough. And again, there are some issues with that, but that's also causing great rental growth, and again, which makes this sector even the more exciting. But also other problems related to energy, the higher demand for energy, and those costs, as we know, have all of a sudden shot up as much as 3.5 times since last year. And again, this is also causing headaches for many industries. Labor again is another issue for industrial, and obviously trying to compete with that a little bit with automation. Retail, I've already mentioned. There is this year again has been very successful, as was last year, for retail parks. Discounters and value brands, have been on a strong growth pattern. PRS, there's a strong issue with affordability of housing, particularly now that interest rates are starting to creep up in local markets. Again, making it even more unattainable for certain income groups to buy housing, which is on the one side positive for the PRS sector, because they should, as I said, in return create more demand for rental properties, and other sort of another alternative, let's say, living asset types.
Let's start with some quick introductions. Maybe just starting with you, Anna. Just a quick introduction of yourself and the company would be great. Thanks very much, Anna.
Good morning, ladies and gentlemen, and thank you very much for joining us today. My name is Anna Duknowska, and I have a pleasure to run the European Division of Investment Management of Invesco Real Estate. Invesco Real Estate is a global independent investment manager, investing globally, of course, so we are very active in North America, Europe, and Asia. We have roughly $70 billion allocated in real estate. And in Europe, we own roughly 200 different properties. We invest money on behalf of our institutional clients, different strategies from the core to really opportunistic, very different asset classes, so pretty much all the commercials, but also hotels and very much PRS in the recent years. And I'm looking forward to this discussion today. Thank you.
Great. Thanks very much, Anna. And Angela, so over to you.
Thank you, Richard. Also, good morning from my side. My name is Angela Spanreuter. I'm head of investor relationship management with Kaufland. Kaufland is part of the Schwarz Group, which is one of the global leaders in food retailing. We run more than 1,350 hypermarkets all across Europe, with a strong focus on Germany and, of course, the CEE region. And we are looking forward to discuss the future of retail together with you. Thank you.
Let's come to you, Justina. Just a quick introduction of yourself and the company.
Sure. Good morning, everyone. Justyna Kędzierska. I'm representing Berlin Hyp, heading the Warsaw office of the bank. Berlin Hyp is a German mortgage lender, one of the leading lenders in the German market, also with a strong position in Poland. Yes, we are also focusing on the ESG topic, so I'm also looking forward to our discussion today. Thank you.
Yeah, and that's interesting that Kevin mentioned in his slides there the importance of ESG across all of the topics really today. And last but very much not least, Petra, thanks for joining us. Just a quick introduction of yourself and LaSalle.
Thank you. Thanks for having me, and I look forward to the discussion today. I'm Petra Blaskova, LaSalle Investment Management, based in London, but originally from the Czech Republic. So I look forward to diving into the region. LaSalle is presented in Central and Eastern Europe. We have a number of assets in our assets under management at the moment. It's about 70 billion in Europe across all property classes. So yeah, look forward to it.
That's great. Thanks very much. So really interesting just to pick up. Maybe let's start with you, Anna first. I suppose, where do you see us at the moment in terms of the market in CE? We heard that some kind of key aspects there from Kevin, but where do you see us from that investment standpoint?
You're asking about CE region.
Exactly. Yes, for the moment. Yes, but
yes,
it would be interesting.
In the wider context.
But it would be interesting also, I think, Anna, to pick up, given your perspective across Europe, it would also be interesting to pick up on that in the context of wider Europe as well.
Yes. So first of all, amount of money available or equity did not disappear. So there is still a very high interest and appetite from both retail investors and institutional investors to allocate money into real estate. And obviously, depending on the risk appetite, different institutional investors, they diversify usually their allocation, either through the different classes of assets or through the regions. CE still is a very attractive proposition for the investors due to the yield premium that we are potentially getting compared to the more established, mature countries in Western Europe. So just to give you the perspective, if you want to buy the core office in Poland, you're talking about, I don't know, 4.5 or 60 yield, whereas in the markets like Paris or Milan or Amsterdam, you would be talking about probably massively sub 3%. And that's the situation. We've been successfully offloading a couple of our core products in those markets. So we see the interest there. I think the challenge with our region is, or actually it's not a region, it's more Poland, that we lack domestic capital. We lack domestic institutional money. which would be a natural alternative in the crisis situation. So naturally, when COVID started, some of the money simply outflows from Poland due to the nature of this capital. Yes, and normally the domestic capital should replace in such a situation the demand side. Basically, the lack of domestic capital makes our market a little bit less liquid compared to the other markets. And this is not the case in terms of in case of Hungary or Czech Republic, where we've seen from Kevin that the amount of domestic capital is there, and it's truly a high percentage. So that's the challenge. In terms of the attractiveness of the different asset classes, of course, and it is not different from Western Europe. Logistic is the definitely a winner of the last 2 years, and with the acceleration of e-commerce and working also from home, the fact that people were ordering goods to their homes rather than going to the shopping centers, this is definitely a very attractive proposals. We ourselves, over the last couple of years, have been heavily invested into logistics. Right now, we have roughly 15, 20 logistic assets under development in the region here. So we're very active. We are selling effectively our assets also to the core investors. So I see that demand is very much there. I'm very much looking forward also toward the residential sector as such, because this is the asset classes which is very, very high on demand from the institutional investors in Western Europe. There are a couple of challenges, of course. The inflation doesn't help. The FX fluctuations doesn't help, simply because this is the only asset class denominated, at least in Poland, in the local currencies rather than euro. So that's it from now. I don't want to take too much of your time. Thank you.
Yeah, no, great, Anna, thanks. Lots to pick through there, and a number of things that we'll pick up as well in a little more detail, because I know, for example, that there's increasing discussion now, having had a long discussion about Polish REITs. Certainly in the CEE Summit, we've been covering it, over the past 4 or 5 years, including discussions with the finance minister. But that actually may look as though that's coming to fruition, which may also drive some of that capital, and we'll pick that up. Angelos, retail has obviously taken quite a battering in terms of investor sentiment, not just over the last 12 months, but over the last 3 or 4, really. What's your sense of that coming from your position, I suppose? How do you see the last 12 months?
Yes, thanks, Richard, for hanging over. So for sure, we live in challenging times, and certainly retail has been one of the most effective asset classes by the pandemic. So it's worth a discussion on the future of retail, real estate, because it's important, of course, to the investors, for us as operators, but also for our cities too, which will change, I think. So the pandemic forces us worldwide to adapt, and I guess also retail will too. So good news is I still believe in brick and mortar stores, and I think many of my colleagues will agree with that. So we're on the way to a new normal in real estate, and especially retail real estate. But what does that mean in detail? So first of all, we see that long-lasting trends we already have seen before the pandemic did not disappear. Perhaps they were overlapped by COVID, and some of them even has been accelerated. But as we see, they will come back to the agenda, and that's for sure. And for already known trends, already introduced, such as ESG, digitalization, more urbanization, there has been new trends added under the roof of, let's say, social distancing, such as home office, which is, of course, important also to other asset classes, such as office, homeschooling, very funny for all of us who have children at home, and, of course, home shopping, depending perhaps on the goods you sell, which is more important. We also have seen a rise of e-commerce in that case. For us as a food retailer, we see, let's say, 4 dominant trends coming back to the agenda, and that's for sure ESG, which is not only a trend, I think it's common sense that it's a necessity we also have to treat with. Next thing is, not surprisingly, more digitalization, but not only in the case of or in the sense of a distribution channel, but in the whole interaction with our customer. Third thing is, for sure, we will see more mixed use assets, and that means more flexibility, of course, for the investors who wants to invest in those assets, for us as operators, but we are, but also for the cities to create new places in the towns. And especially with regard to retail real estate, I think, and that's where the CEE has an upcoming trend, to my opinion, which we've seen perhaps in the Western European countries much earlier before. That's a more need for revitalization. Kevin said, just introducing, that shopping centers were not on the agenda of buying and selling of the investors, but I think because there's a lot of need of revitalization, of bringing new tenant mix in. And of course, and that's trend number 5, unsurprisingly for us as a food retailer, we see us for many locations that we haven't thought of perhaps before. And that's, of course, big shopping centers, that's big retail parks, and or even inner cities or high streets, that there are opportunities, common mutual opportunities for investors, cities, and us to get to new locations in there. And the need for revitalization will be more than the last years, especially also in the CEE. And we as a food retailer are ready for being the new footfall anchor there.
Great. Now that's interesting. We'll drill down a little bit later, Angelos, into that in terms of the retail sector, because I think that changeover in terms of what were the traditional tenants in terms of the real estate side, and what that means going forward is really interesting. Justyna, it'd be good to pick up from you if we can. I suppose also your sense of I guess where we've been and where we're heading, but also particularly, I suppose, what the outlook is on the finance side as well, Justyna.
Mm-hmm. Typically the banks follow their clients, the investors' sentiment, and it's just the lender's preference is to lend to the market segments which are most active, meaning most liquid. And as already Anna and Kevin mentioned, regarding the most attractive market segments, this is exactly the perspective of the lenders as well. So we have the big winner, meaning industrial offices. Of course, always I think that the office product will always remain on the agenda, both on the investor side and the lenders as well. As for retail, retail segment, as we also have heard, was not really very active in the last months or the last 2 pandemic years. So in result, of course, the bank's appetite, the bank's sentiment is still somehow limited. Whether this will change, for sure, the question is in which direction. We are indeed seeing more and more local type of schemes. In Poland specifically, we have seen a bigger activity in the retail park segment, convenience centers, portfolios being traded. Of course, with such schemes, some other aspects are quite a challenge from the lender's perspective. For example, these portfolios are typically very much, not just diversified in terms of location, which is of course nice, but they are also, they are small ticket transactions. And this means, of course, a huge administrative work for the lenders, and having the foreign bank perspective, I need to say that also to understand such a product appropriately, you need to have a very good local understanding and local know-how of the locations. So I don't think this will be a big star in terms of the bank's interest very quickly. Last but definitely not least is, of course, already said, ESG and all these sustainability aspects will definitely be in focus of all the lenders, all financial institutions, and well, very soon all market players as well, I think.
Yeah, no, that's really interesting. Thanks very much, Justina. Petra, just coming to you, I mean, that's interesting there that Justina's talking about having to focus down on specific, rather than looking just across asset classes and regions, but actually beginning to drill down much more into that. What's your sense, I suppose, of the market at the moment, Petra? Is that something that you're seeing, that investors are beginning to have to be, I suppose, even more selective at the moment in terms of looking at those sectors, especially?
Certainly, when the world went into pandemic, the decline was quite synchronized, if you can think about it that way. But coming out of the pandemic, there will be different speeds, different directions for countries and for the markets, especially around emerging economies across the CEE. So it is very important for us as an investor to make sure that we invest in properties, in submarkets, in cities that are resilient from a long-term perspective. So there is a very strong emphasis from our side to make sure that whether it is offices, logistics, or residential, that we do our groundwork, that we understand the micro markets, so that the resilience is there against number of risks that are creeping up, whether it is inflation, prospects of increasing interest rates eventually, not immediately, but eventually it probably will happen, and unemployment rates. So I can go for a long time where we see the risks coming from, but it is, as I say, it's very important to make sure that the micro markets are very, very sound and very solid.
Okay, that's good. And Petra, from your point of view, for those who may not know, in terms of the strategy for LaSalle, are you looking more at, I suppose, regional cities as well as capital cities? What's your sense of that?
It very much depends on the asset classes or the property classes. So similar to Anna, we very much like the logistics and living or any niche sectors where you don't need to necessarily concentrate on the large cities, whether it would be Warsaw or Prague. But when we think about offices or retail, those two would be probably the only two cities where we feel that the demand and the hype is there going forward, to make sure that, again, it's about the resiliency going forward. So I see that there is quite a strong polarization, actually, between some of the strong cities and some of the regional cities. So again, there will be winners and there will be lots of losers, unfortunately, coming out of pandemic.
Okay, great. Anna, I just wanted to pick up on obviously everybody's looking at risks the whole time, judging, returns versus risk. I suppose, how do you see CEE at the moment? And also, what are some of the key risks that I guess Invesco are looking at? Are you concerned more about interest rate risks or political risks? What's your perspective at the moment?
Very interesting question. I think political risks, they are, and they will be. So we have very little influence over that. Although obviously indirectly it has. That they have also the influence on the real estate performance. I think from the purely real estate perspective, the risks we are looking are obviously the ones that Petra mentioned. So the liquidity, the resilience of the certain locations from the perspective of investment. but very much also the ESG credentials. We have a very robust process right now with all our investors and with all our investment strategies to assess not only the climate risk, but also the transition risk for the potential assets. So if we're investing in something for 10-year hold, whether this asset in 10 years will still be resilient, whether this asset will meet the carbon neutralization credentials, net zero objectives, and whether the asset will be liquid or there will be a risk of obsolescence of this asset. So we really place and focus a lot of attention with the specific ESG due diligence, also on the social and governance aspect of things. Of course, from the CEE region, I guess there are some macro level risks which are important. I mentioned already the fact that the Polish zloty is devaluating, that there is a bit of instability in the monetary and fiscal policy at the moment. The fact that the inflation is going beyond something which I would call controllable level. This will all inflate also the cost of construction, cost of running and operating the properties. I think you've mentioned, I think Kevin mentioned, the energy pricing tripled. So if energy pricing tripled and operating cost went up by 10 or 15%, what is really the net profit that the investor is able to earn? Because I presume not everything would be easily transferable to the tenants. So the tenants will not be willing to pick up all those costs themselves. So these are the risks that from the cash flow perspective and sustainability of the cash flow in our region is something that I would be slightly concerned. And I'm not saying that particularly concerned, but definitely this is something on the radar for our region.
Okay, great. Thanks, Anna. Monica, I know that you've got to leave us sadly in a second, but I just wanted to pick up with you. You mentioned CEE and ESG, particularly in your introduction at the beginning. So how important, do you see that now going forward for 2022 and beyond? I mean, obviously I was at COP26 there. We've just launched Impact Magazine because of the increasing focus on this area. Do you see this as something where CEE can actually move forward quite rapidly? What's your sense of where you are at the moment in the region?
I will say that it's not even in the CEE region. We get a lot of questions. Actually, it's each of now the meeting, if it's the occupier or if it's the developer or it is the investor, we get the questions about ESG support or ESG strategy, how we as a company can support them with the decision. Also, when we are having a property management portfolio of our clients. So from our perspective, we actually, as a company in a global level, also implement ESG program for us as a Colliers to be also as example, but at the same time for our asset portfolio, which we are managed. And also we just created actually the group of people who are advice for our clients. So again, for example, we have now clients who have really a lot of assets, not just in Poland. There are more like medical clinics. So it is really crucial for all the CEO now to implement and to present to the board the ESG program. So the question mark is, of course, we can ask ourselves in such a short time if it's just a greenwashing somehow we see, or is it really like a very deep discussion and implementing in not just in 2020, but it's a plan for next couple of the years, this program, and to be consistent with all the strategy, because it's not obviously easy for all the assets are different. They have a different technology, different type of the energy consumption, but ESG, it's not about just the sustainability and environmental friendly, but also it's about any other impact. And I think that what we all of us challenging now that there's very limited expert on the market and in the Central Eastern Europe particularly. It's just something new, and all of us actually are searching for hiring people in this expertise. And find some eight talented person who understanding and really passionate about it is very, very hard. I tell you also from our perspective, as we are searching for the head of for the EMEA region. However, we actually created like a committee of 5 people with different expertise, and we already implemented some project for property management as well, again for the occupiers. Yeah, like this medical clinic, this example. Yeah, it's a really great project.
No, good. Thank you, Monica. And I know you've got to leave us, but thanks very much for joining us and welcoming you at Colliers. And we look forward to being back in that very office.
Always welcome.
in January with Richard Stevens from Poland Today as well. And I know you're on the call, Richard. So if you've got any questions or any comments, please do post those in the chat along with everybody else. And also, just in case you hadn't noticed, Kevin's presentation is also, if you go to the files section, then you can also download that presentation as well. Justina, some interesting points there brought up by Monica. And in terms of the lending side, what does that mean for you? Is there a concern around the stranded asset sides? Are you going to be focusing more on less on new build and more on, I suppose, redevelopment? Those types of assets. What are you looking at from a finance perspective?
Yeah. So first of all, we have addressed this topic already some time ago. Well, the reason, maybe just as a background, the reason is, of course, that the financial institutions are also a very, a crucial element in the implementation of the EU taxonomy. The banks are expected and, will be forced to, in fact, to implement ESG scorings for all our credit transactions, credit engagements. So we have already started this process. So this is on one hand side. On the other side, we are, of course, as Monica mentioned, also hearing from our clients, our investors, a huge need for an adequate product, meaning green loan. Lots of investors, they have a green loan, let's say hotspot in their strategies. And we are also working on a solution for them, on an adequate solution. We would like to be offering green loans dedicated, of course, to very, very green product. And such green loans would be also assisted by adequate certifications, which could be then used by our investors. On the other side, we are also appreciating and seeing the huge need for a financial support for the existing stock, which already needs or will need to meet the new sustainability criteria. In which direction this will develop, while we are still working on adequate solutions. We are in a constant dialogue with our clients to understand how such a product should be shaped and so on. Again, last but not least, we as Berlin Hyp also in our corporate strategy have ESG in the very focus, and our recently announced target is also to be climate neutral till 2030, which I think is very ambitious, but it's fantastic to be there.
Great, thanks, Justina. Petra, it'd be interesting to pick up your side from the investment point of view. Are you, in terms of that ESG carbon neutrality side, what does that mean, particularly in terms of, I suppose, your overall strategy, but also does this mean that you're beginning to look more at embedded carbon, so therefore taking that into account when you're looking at new build, buying development versus not buying development? And I suppose, how do you see the CE market overall in terms of the standing assets versus new assets and that ESG side in terms of your portfolio?
Sure. To start with, there has been studies done that real estate represents about 40% of all carbon emissions at the moment, just purely by building it, by heating it and cooling it in summer. So as an industry, we have a huge responsibility going forward to make sure that we are at the front of the changes for ESG. So that's incredibly important. But if you put whether it's CEE or Europe in a wider context, Europe is actually in a very good position from that perspective. Two reasons for that: lots of new regulation, lots of leadership within the ESG is initiated in Europe, so we are upfront on that. And secondly, geographically, we are in much better position to be protected from the flood risk than some of the big US cities, which sit on the coastal cities, or in Asia as well. So Europe is in a very fortunate position from that perspective. But for us as a LaSalle, it still means that we need to be at the upfront, and we want to be one of the leaders in making sure that we are carbon neutral by, I think our target now is by 2040 or together with JLL. So what does it mean when you look at practically at investing? And the line is getting a little bit more blurry, whether to concentrate on the new assets, new shiny buildings, which has been traditionally the interest of the industry, or we need to look at more at redevelopment and refurbishment of existing assets, just to make sure that we keep that carbon emissions at bay.
Okay, great. Thanks, Petra. And anybody else we've all been terribly polite so far, but anybody else can come in on any of those topics. I've got a couple of questions that have come in actually also on the chat. So thanks very much. A couple of questions from you, Richard, actually. Thanks very much for joining us. Good to see you. So the first question is for Angelus, actually, which is, what is Kaufland's strategy for online sales versus sales from physical stores? And I suppose how do you see the growth from there? Angelus, so I don't know if you want to pick that one up.
Yes, of course, Richard. Very good topic to talk about, because for sure, there's no doubt about it. Corona even accelerated the trend of digitalization. But perhaps from our side, good news is Corona, the digitalization trend, will enrich our business and not replace it. So as I said, we still believe in brick and mortar stores and keep expanding in that. And I think also not only us, but all the industry, also in the non-food sector will. But I give you some examples how we treat with. Of course, my personal opinion is regarding food, that the main market share also in the future will stay in brick and mortar stores. But of course, we have a look at how the digitalization trend will shape the new future of retail in that case. So it's all about the new interaction, not only the sales channel of e-commerce, but also the interaction with our clients. So we currently test, for instance, click and collect. We have a lot of collaborations between online delivery services such as Evally, Glovo, and others in Romania, in Poland, and also in the Czech Republic. And for those perhaps who are familiar with the German market, we currently integrated a big platform, formerly real.de, in kaufland.de, which now offers perhaps the best of both worlds, offline and online. And through kaufland.de, we sell about more than 25 million items, but with focus on non-food and not food. So our strategy is strongly related with an expansion on brick and mortar stores, but of course keeping in mind the digital interaction between our customers, such as also with our new loyalty programs, such as the Kaufland card. And I think that's the major trend of being online and offline aware and interaction with the customer.
Great, thanks very much. There's a lot of questions coming in now around the sectors, so we'll definitely pick those up. But there's one here that I just wanted to come to as well, which is from Reka Tura. Thanks very much, Reka, for this. Which is, countries like Poland are heavily reliant on coal. Is net zero carbon a feasible outcome for the real estate sector in areas like Poland? So I don't know whether anybody wants to pick that up on the practicality of it and how achievable it is. I mean, that's quite a big question, I know.
Yes. I can happily pick it up, because we've been doing at Invesco the net carbon trajectories for our assets, and most of our portfolio has already done this exercise. And the reality that real estate will never be carbon neutral. Yes, that there will be always some element of the carbon to emission which will be embedded in the building. However, this should be only a very small portion in the future, which potentially will be offset by simply buying the carbon credits. That's already a very popular solution in the United States, where you simply buy offset your emission with carbon credits that you pay for. So there is a price attached to that. However, there are a massive opportunities for improvements just without even going into the heavy refurbishment and replacements and capex. But very much it is about operational side, about light touches. And usually what we can see from the trends, you can really save up to 30% or even more on the carbon emission, just wisely using the building and engaging with your stakeholders, meaning your tenants, your partners, your operators of the buildings. So this is feasible. And of course, the big area around decarbonization stays with the heating and cooling of the building. As you know, Poland is pretty much fully on carbon. So even if we are, in theory, buying renewable energy, in the electricity grid, we're still getting the carbon, so polluted energy. And until Poland as a country will not have their own ambitious targets, it will be very difficult to get rid of the carbon totally. But I truly believe, and I really hope that we Polish people and Polish citizens will accelerate very much, and it will not be a target for decarbonization by 2049, I guess it's at the moment announced, but much quicker. And we will follow other countries whereby, if you look at France, in 10 years' time, you will not be able to lease the building if you not meet certain carbon emission criteria. Simple as that. So I think those regulations and those government requirements are coming into force, and we will see much more of that. And I strongly believe that we will see a carbon emission recorded as a liability on the balance sheet of the corporations going forward.
Okay, that's interesting. If anybody else wants to pick up on that view, please do. But otherwise, I just wanted to pick up on there's a lot of questions coming in the sectors. So let's dive into the sectors a little bit. Kevin, it'd be interesting to get your sense of the markets. I mean, there's a question come in there which is around, obviously we're seeing the fact that everybody is piling into warehouses in terms of the sector. But what do you think of that? Does that sound a note of caution for you? Is the industrial and logistics sector going to continue being very strong for the foreseeable future? Thanks very much for that, Richard. What's your sense of that? Do you see investors beginning to look more cautiously? And then I'll also pick that up with Petra and Anna as well.
Sure. I mean, obviously, yes, it's been a very favourable sector over the last almost 2 years. Again, as you know, a lot of companies, retailers, people involved in the supply chain, have looked to improve or upgrade their networks in light of either selling things online or expanding their capabilities, due to supply chain shortages and disruption. So we definitely see very, very strong demand still across multiple sectors. Even certain sectors which are having some levels of difficulty, such as automotive. So whilst more traditional automotive production may have some challenges, we're seeing greater demand from those that are looking at building electronic vehicles and batteries and so on. So so where some things are falling away, some things are growing. Land, the majority, as Central Europe is dominated by a small number of players who control upwards of 70% of the market. So a lot of those also control large proportions of the land bank as well. So again, it's very much a landlord's market. We'll see that continue for some period of time. And again, I think the concern obviously creeps in where with all various other sorts of costs rising, whether it's energy, labor costs, rental costs. At some point, then there are factors that will cause some players to break. So that's not happening right now, but there is some concern going forward, and ultimately, all of that cost and that increasing cost across the board ultimately ends up with tenants or consumers. And again, ultimately, that will push inflation further and further. And at what point does that does that break? So so there are concerns there. Things look still very reasonably healthy at the moment, but we'll see how that plays out in the next couple of years.
And is your sense, Kevin, that yields are heading down further?
Yes, indeed. We do see them coming down a little bit further. And again, like I said, the majority of those, those groups, who do control a large proportion of the market, are long-term holders. They typically don't sell. So 30% of the market that is built and potentially there for sale is being chased by an awful lot of money. So so that those factors combined obviously mean one thing. Very, very, very anecdotally, in Western Europe, we're even seeing or hearing stories that industrial yields could even go below 2%, which obviously is starting to break all kinds of records, really. So, but yeah, we're not going to see, I don't think, Central Europe getting to these levels that quickly, but ultimately, and I'm sure a number of the developers will agree and investors will agree that the quality of the product is still equally as good as what you'll find in Germany, France, UK. The rental levels are a little bit different, but ultimately, the product is equally good quality. It's new, and coming back to just quickly on the sustainability point, a lot of the product in Central Europe is much newer than Western Europe. That's not to say that it all meets all the various ESG standards, but as I said, it may have a small head start.
And Petra and Anna, it would be good to get your perspective on that. Petra.
Sure. I agree with Kevin. And logistics yields are certainly already below the offices, and it's very likely they're going to stay there for quite a while. But you have to start about logistics not in isolation from retail, because historically we would have very low yields for the high street, for the very prime areas where the consumer economy would drive yields into very low levels, and logistics is becoming a bit of that. So going forward, maybe not as much in Poland, where land is a little bit more available than in the Czech Republic, for instance, but the very good locations, very close to the consumers. So the infill centers, the urban logistics, the assets that really support that e-commerce within the cities can really demand a very low yield going forward. But what makes it interesting for us as an investor is we will see quite a rental growth there as well. To what Kevin is saying, that there is a number of developers who control the market, not only in CEE, but in Europe in general. They will start to demand much higher rents because they realize that importance of those small pockets of development in the right locations to really support those urban cities.
Okay, good. And Anna, does there get a point where, yields begin to make it difficult to actually put money towards the logistics sector, or is there a sort of view that rents are going to keep increasing, particularly in that area? What's your perspective on it? Obviously, the money is certainly looking at logistics at the moment.
Yeah, so that's a good question. We have rising interest rents on the horizon. We have this all inflationary measures or observations in Europe and in US. So the question is how the interest rate environment will behave, and obviously where there will be any further room for compression. I thought that we have already reached the top, the maximum yield that you can see with the logistic, given the fact that you have still a lot of availability of land in Poland. Of course, this is not in Czech Republic. We know how difficult it is to secure the logistic plot in Czech Republic. So it is a specific nature of the Polish market. But apparently the interest, the demand from the occupier side keeps growing. Definitely there are trends towards urban logistic and last mile logistic. We are also very actively investing in that at the moment. So this is clearly another trend. It's very difficult. I don't have a crystal ball to say whether we'll achieve 4% or even lower. Perhaps this is the trend. Logistic in whole Europe is hot, and logistic yields keep compressing everywhere in Europe, starting from Portugal through Poland. So it's a trend. Whether this will continue for another 2-3 years, I think so. It will continue. Where is the bottom or where is the top? It's very difficult to say. At the moment, we're still making money. We're still effectively developing those products. I would be very careful if I was to pay, 4.4 for the core logistic to keep it long term for 10 years, because there has to be some rental growth coming. So unless you have a very robust location, there are risks around that, in my view.
Okay, good. I wanted to pick up I'll come to you in a minute, Angelos, around some of those areas, but I wanted to pick up, there's been a few questions about PRS, and that was obviously residential has been one of the kind of key topics across Europe, or in fact globally really, over the last 12 months. Justina, there's obviously a sort of from Kevin's slide, there's obviously more activity, particularly on residential in Poland and Czech Republic. How do you see that, I suppose, from a financing side, development financing or financing? Do you have a perspective on that as a bank?
Sure. Well, PRS has been developing very, very dynamically in the recent years or even months. And of course, once the activity in the market segment is growing, the lenders are also looking at it a bit closer. There is a number of banks already active in this segment, already financing PRS projects. We on our side are also almost there. We want to enter this market and have an offer for our clients as well. For sure, it is an element which was missing in Poland if we compare the situation with the other European markets, where in fact residential accounts for about probably 50% of the investment market. We hope it would help our market as well, especially once the retail is not so attractive any longer, at least the schemes which we used to know in the past. So of course we are also there. We believe in the further development of the market. We understand, of course, and share the investor's perspective as to the fundamentals of the specifically Polish market fundamentals, which are a kind of a good prospect, good aspect for the market to develop.
Okay, good. And at the moment, Kevin, that development is really just in kind of Poland and Czech Republic. Do you see that moving more into other areas, like Hungary, like Romania, or what's your sense of that?
There are pockets of PRS and development in this sector in other countries, but less pronounced when you measure it against Poland and the Czech Republic currently. I think we're in agreement that it will come on further, particularly as affordability starts to slip away for a greater group of people. Obviously we've over the last recent months, we've seen local interest rates, local central banks pushing out interest rates. So whereas previous few years you could have had you could have borrowed money for less than 2%. You can't really, in Czech Republic that would typically start with a 3 nowadays. So there's concern on the borrowing and borrowing side for some people. But whilst for sale prices continue to rise, and they are across most countries, then developers of residential projects are not really incentivized to sell projects for rental purposes. However, having said that, it still is happening, and that's mainly happening in Czech Republic and Poland at the moment. There are some specific groups who are responsible for the majority of that, such as Heimstaden, Zeitgeist, NREP, and so on. And the advantage they have at the present time is that they typically can operate those, whereas other investors who would like to get into this sector don't necessarily always have that capability in hand, and there is a shortage of professional operators in the markets at present. So there's still a few challenges and hurdles to get over, but affordability certainly will help drive that. And again, I think we'll see greater alliances between investors and certain developers going forward. And again, more cross-border activity, as we've seen with Crestil, Wing, just to name a couple. So certainly getting into the Polish market, amongst others.
Okay, great. Angela, so I know we talked a little bit about retail already, but I'd be interested to get your kind of sense of, in terms of the growth area. You mentioned there that you were beginning to look at assets, real estate that you wouldn't have maybe looked at before in terms of expansion. So what does that mean? Does that mean you're looking, at regional shopping hubs? You're looking at areas within cities? You're looking across the whole of the CEE region? Where are you looking? What are you targeting?
That's a very good question, Richard. Perhaps it's a bit the other way around. Of course, we're known as a big hypermarket in the CEE region, with a lot of freestanding hypermarkets, all running well, and we still will keep expanding in that very successful formats. But as I mentioned, we as a tenant, and that's also important to us to underline, we are not, we would never develop on our own a shopping center, a big retail park. But honestly, if you have a look at especially, of course, Romania, Poland, the Czech Republic, and also in the smaller countries we are present, Slovakia, Croatia, up to Moldova and Bulgaria, these are very implemented from the consumer side known locations. And we, as a big footfall anchor in the food retail sector, we are also looking for being there as a tenant. And that's perhaps also some kind of a new story, but also reflects the thing, what Kevin also introduced perhaps, and I jumped on earlier, that the need for revitalization in big shopping centers, in big retail parks, in the high streets will get more enforced the next years. And that's where new anchors for frequency, for footfall will be needed. And here we are.
Good. Well, it'll be interesting to see how that plays out in the retail markets. I'm conscious that we've only got about 5 minutes left. And so let's just do a very quick view. Petra, let's take your view on the office markets. How do you see that going forward? And also there's a question that has come in very interesting, which I'd like to address as well, if we can, which is on the more sort of alternative ones. So, data centers, senior living, healthcare, those kinds of areas that might have been seen as very niche, but have now for the last 2 years all been kind of in the top 10 on the sort of PwC ULI rankings for investor intentions, along with life sciences and those kinds of things. So I know that's a lot for us all to try and pick up in 5 minutes, but let's have a go at it. Petra.
Thank you. Offices. I am in fact dialing in from our office in London. So personally and as a business, LaSalle, we are big believers that offices will have come back. But there is a but, which means that they will serve a very different purpose to what they had before the pandemic. They will become centers of confluence, of collaboration, of strategy, of thinking, socializing, making sure that your colleagues for hiring new teams and all of that. You really do need that physical space. But we also recognize that that people will need the flexibility, that they will want to have the choice of working from home on certain days of the week. So from an investor perspective or LaSalle perspective, again, it will be the offices of the future are the ones which are in very strong locations, in areas with strong amenities, good transport links, and all of that will have to work for the people who have the choice to go back to the office rather than working from home. We would call them confluence zones. So it's very important that you have all the elements presented there for people to really come back. To your other question, Richard, on alternatives, there is not enough assets or not enough stock within offices, retail, or the traditional asset classes at the moment, and more capital is flooding real estate as an industry. So investors have to move to the alternatives just purely to find what they are looking for, what their targets are in terms of the returns. The challenge is that the product, to what Kevin was highlighting earlier, it doesn't always exist. But for us, what it means that we may need to build it to address those very strong demand drivers, whether it is the senior living, whether it is cold storage, which personally is something that I think it's a fantastic asset class. Data center is very complicated, but again, it is something that we will see more of going forward, and it's very good that we have more choices now, just purely than offices and retail 10-15 years ago.
Good, thanks. Anna, do you want to pick up on that?
Yes, I'm also in the office, so we are also a strong believer in the office. We Invesco has been lucky to probably invest rightly in the past in the really resilient gateway cities locations. So we've never been investing in the very much regional or tertiary cities. We stick to capital or really gateway cities in Europe. So none of our offices particularly suffered during COVID, and we can see also the resilience from the occupiers. If you have the financially good standing and good covenant occupiers, usually there is no problem, and they've been also supporting the view that offices will be required. But obviously different setup, much more focus on the ESG credentials, so wellness, well-being, air quality, light access, ease of transportation, solutions for the green transportation, flexibility. So this will be definitely the themes around how the office of the future would look like. Also the materials used for the construction. So there are discussions about timber constructions being introduced as an obligatory element in certain countries in Europe. So these are the trends. On the other alternative classes of assets, we are observing, I would say, we've been looking heavily at the senior housing sector, but more on the assisted living rather than the typical senior housing. But again, this is a very operator-intense business. So it's almost like a partnership with the operator. And we mentioned this on this panel that even on the residential, on the PRS side, we're lacking the proper operators in Poland. There is not enough scale yet. So I'm sure it will come, but it's not the trend for the next 1 or 2 years. It's more the trend for the next 5 to 10 years. On the data center or cool storages, we would be careful. We take really ESG seriously into account, and given the amount of energy required to run those operationally, I think Invesco would be very, very careful with investing in those type of. So I think we will stick to typical products, typical commercial. We strongly believe in the hotel rebound back. So that's a class of asset that we've been very active in. We have a couple of funds dedicated to that, and we strongly believe in that recovery in this sector as well.
Okay, great, thanks. Kevin, quick one for you. Gary, thanks very much. Gary Morell, thanks very much for this question, which is, will the yield differential continue and sentiment continue? So Poland, Czech first, followed by Hungary and then Romania. Do you think that's still in place, particularly looking at logistics or the other sectors? Is that sort of still true, Kevin?
Yeah, I mean, largely yes. I mean, this is partly driven by, again, at present, what we see from investors and their appetite for some of these markets or sectors. I mean, quality of asset wise, again, there's a lot of very, very similar types of products in many markets, and great product being developed. But yeah, I mean, it's a combination of everything from political to economic to investor demand, really, and I think yes, we'll see those kind of spreads. I mean, they have, I think, prior to the global financial crisis back in 2007, there was a much narrower spread between these markets. We could see them coming a bit closer than they are today, for sure.
Okay, great. And last question to everybody, because we're definitely out of time now. But last question is, so if we're looking at countries, regions or sectors, which do you think provides the best investment case? Because the title was about hot assets in the CEE. So what are those? You can also choose that to be areas for growth, Angelos, if you like. So let's start quickly with you, Angelos, on what's hot, where next?
Well, to keep it short and simple, Richard, I end up with an optimistic outlook from our point of view for all the CEE countries. So the future is one of the most exciting, and food definitely became investors' darling. So let's start to develop new fruitful anchors together.
Great, thanks very much. Petra, let's come to you for your view.
Sure. We big believers in logistics, especially those infill centers. Urban logistics is something we like, but we would stick to. We have limit on the city size, so it would probably limit us to Prague and Warsaw to a certain point. All the other cities might be too small for the future resilience. But we also talked about residential, all the living, all the alternatives. That's all we find very, very exciting going forward in CEE.
Perfect. Thanks very much. Justina.
Yeah. Well, I would hope that the regional offices, which seem to have been neglected in the last months, which for the reasons which were in fact mentioned today, the limited flexibility and possibilities to travel, and of course regional cities will not be a hotspot for the biggest names like just Petra was mentioning. So I think it might be, and it has been already a good spot for the local for the local investors, the domestic capital, not necessarily meaning Polish in Poland, but I'm speaking of domestic capital as more CEE capital. And well, I would hope that this would develop, because we don't need to mention that prime office will always remain a hotspot for all the big players, and the other market segments as already discussed. So, yeah.
Great, thanks very much. Anna, over to you.
Yes, logistic definitely, but only if we're able to partner. We probably wouldn't be buying the standing logistic. But I think also the food anchored retail parks is the class of assets that is becoming again on the radar. The problem is with that, it's obviously a scale, because you probably will not be able to buy just one. So you need to buy 10 or 20 of those. But with a partner like Kaufland, for example, behind, that would be something definitely very attractive proposition. So we see these trends already in Europe, that the retail is coming back, but only if it is properly food anchored.
I can see a great partnership forming already, Anna and Angelos. Kevin, last but not least, over to you.
Well, I think the panel has covered it most of it. Again, obviously, logistics will continue for some time. Obviously, there's the closer you get to cities, there's obviously that competition with for land, with residential. Obviously, residential, we need a lot more of it. There's a big undersupply, and that's obviously not helping the pricing and cost of it. But that hopefully, I think that will spell good things for the residential sector. And again, I think it's just if developers and investors can get behind some of those other elements and alternatives, so I think there's some great opportunities there as well. And as I said, as Justina mentioned, regions is a great spot for domestic capital, which are growing in strength and able to compete with the likes of Petra and Anna on some things. But the future, I think, is going to be interesting over the next couple of years, and hopefully
Great, thanks very much, Kevin. I feel as though we have virtually hosted it from your offices in Warsaw, so that's great. Look forward to being back with the CEE Summit with ourselves, Poland Today, and Richard as well, in the Collier's office hopefully towards the end of January for the CEE Summit. So look forward to meeting up for a whole day there to discuss these topics as well, which would be great. Thanks very much from me. And if we could all give a sort of virtual round of applause to the speakers and yourselves, that would be great. Thanks very much to everybody for joining us.